Oh, good morning. It is Wednesday, September 28th, 2022, and I am Kenny Polcari, your host of the party. And as you can see, I'm sitting today, which is a little bit uncomfortable for me. I'm in a hotel room in Chicago. I'm trying to keep the sun out because it's screwing up my video. So I got half the curtain closed and half of it open so that there's sunlight. In any event, it is a crazy day. Not only is the U.S. getting hit by a Hurricane Ian up the coast of Florida, tornadoes spawning everywhere, but we've got chaos in bond markets over in Europe and London, and out of control action here in stocks, not only in this country, but around the world. So what is it that you need to know? What is it that we need to be prepared for? So the Dow theory continues to play out, right? That's what we talked about last Friday, and it's continued to play out all week, and that's not a surprise. Global bond markets sell off, sending bond yields higher really around the world. Apple hits news this morning, cuts their iPhone production. The stock was down 3.5% in the early morning trading. And what do we have for dinner tonight? Well, considering we need something comfortable, we're having potatoes and eggs because it's always a good comfort food. Market-wide circuit breakers. While I don't think they're going to get triggered today, you should know the S&P needs to lose 255 points for a 7% first-time halt. It needs to lose 474 points for the second halt. That would be down 13%. And if it loses 20% or 729 points, then it triggers a trading halt for the balance of the day, right? Listen, I'll just say this. There's going to be no video tomorrow because I'm going to be traveling back to New York, but you can catch me on Making Money with Charles Payne on Fox Business at 2:30 p.m. tomorrow afternoon. Okay, so stocks continue to thrash around. The S&P breached the June low, which was 36.36 yesterday, to create a new 2022 low of 36.23 before rallying into the bell to end the day at 36.47, a loss of only 8 points. The Dow lost 125 points while the Nasdaq rose 26 points. The Russell gained 7, and the transports added 154 as markets try to stabilize, right? And while that may have felt good, it's not really anything to write home about. The action overnight and this morning points to more pain and downside ahead. Dow futures were down 300 points. S&Ps were down 40, leaving it on the cusp of breaking 3,600. The Nasdaq was down 175, and the Russell was off by 20. And that was early this morning at 6 o'clock. Markets have since rebounded, but that was the tone, which means we could test it again. Global markets also down across the board. Asian markets, Japan down 1.5%. Hong Kong down 3.5%. China down 1.6%. Australia off 0.5%. Taiwan and South Korea both off by 2.5%. Year to date, the performance is even worse. Japan is down 9%, Hong Kong down 27%, China down 22%, Australia down 13%, Taiwan and South Korea down 27%. European markets are not much better. The UK down 2% and 7% year to date. The CAC 40 down 1.7 or 20% year to date. The DAX down 25% year to date. Eurostock down 24% year to date. Spain down 16% year to date, while Italy is off 25% year to date. And as expected yesterday, we heard from Chicago's Charlie Evans, and he tried to sound a bit more dovish than the rest of them. And that sent stocks higher in early morning trading. But remember, Charlie's not a voting member of the FOMC committee. So while his thoughts are nice, they don't really count. And then we heard from St. Louis Jimmy Bullard, right? That we talked about. I told you that was going to happen, who is a voting member, and he squashed any idea that the Fed was about to pivot. So his message was much more important. He was then joined by, guess who? Minneapolis's Neely Kashkari, another name that just can't avoid the cameras, right? He's a non-voting member. But he reiterated what Jimmy said, and that just continues to stoke the fire of rising rates and economic difficulty. The dollar continues to soar in this after the White House made it clear that they would not try to weaken the currency. And the strong dollar puts another headwind on S&P earnings, which is not reflected yet in analyst estimates. It's just like it's not reflected in many of the multinational corporate earnings yet either, right? So these analysts and these corporate CEOs are going to have to take their dunce caps off and start adjusting estimates for the coming earnings season, which starts in just 2 weeks, as well as the one after that, right? Both the third and fourth quarter. Because if they don't, the market will. And by the way, the market is already pricing in what it expects to be downgrades. U.S. bond prices continue to get hammered, sending yields to levels not seen since 2008. The 10-year piercing 4% overnight, on its way to 5% and then 6%. And then what? Can anyone say 1979, 1982? When exactly did I start warning about a 70s style repeat of history? I think it was like November of 2021. I told people you needed to start to be concerned. The Bank of England making an unexpected announcement at 6 o'clock this morning saying that they would start buying long government bonds on whatever scale is necessary to help calm the chaos in the growing UK economic storm, right? That's not good. The pound continues to fall amid mounting criticism of Prime Minister Truss's fiscal plan, right? The IMF, the International Monetary Fund, calling her tax plan, her cuts, excessive and in need of revision, as it will do long-term damage to the nation's debt rating. That's not good either. UK Chancellor of the Exchequer, Kwasi Kwarteng, imploring traders not to bet against the pound. Again, feels a bit desperate. Not good. European banks all now predicting a difficult economic time across the region that could last well into 2024. That doesn't sound so good either. Today, we're going to see 6 more Fed heads speaking, right? They include Bullard, Bostic, George, Evans, Bowman, and yes, J.J. Powell. Do not expect any of them to contradict each other. Bullard, Powell, and Bowman are all voting members. The others are not, but expect them to sing the same song. And while we got plenty of eco data, it's now irrelevant for the moment as the angst builds, right? No one really cares that consumer confidence was much better than the estimate. It's not going to change the narrative. No one really cares that new home sales also, which did surprise on the upside, rising by 28% month over month, did little to soothe the mood. Eco data today includes mortgage apps for the last week and pending home sales month over month, which are expected to be down 1.5%, while year over year sales are expected to be down 24.5%. Now, pending home sales suggest that both buyer and seller have a deal, but not necessarily a mortgage commitment yet. And with mortgage rates now kissing more than 7%, there's a risk that we see even softer pending numbers. If not today, then certainly next month. Meanwhile, natural gas prices are surging across Europe. Vlad warning the Europeans that he could cut off supply. That's not helpful. And then suddenly there was an explosion of 2 gas pipelines that deliver gas from Russia to Europe. So I ask, guess who just cut off supply? The explosion's now considered deliberate. But in any case, it is what it is, and gas prices are up, and the Europeans are at risk. So a quick question here. Where is Angie Merkel now? How does she feel about making Europe completely energy dependent on Russia? Which speaks directly to why the U.S. needs to change our energy policy to make sure we are never dependent upon anyone for our energy needs. And we could talk about a whole lot of other things too. Chips, semiconductors, hello. I mean, the writing is on the wall. The question is, does anybody see it? Oil is trading up, now back to the $80 a barrel level. The Saudis and OPEC Plus making noise that they would intervene in the oil markets if necessary to support prices. I pointed that out on Monday. And then yesterday, UBS also floated the idea that OPEC Plus is considering the move, saying that Russia is pushing the idea. Wow, surprise, surprise. Think about that. Russia pushing the idea to create more chaos and havoc. And this is what we get. After all the global bankers ignored all the signs that they were looking for. I mean, remember, JJ said, and I keep repeating this because it's so true, that when CPI rose above 2%, that would be the signal to adjust monetary policy. Well, that happened in April of 2021. And what did JJ and the Fed do? Absolutely nothing. They told us that while the data did change, it didn't change enough. Meanwhile, it jumped from 1.6 to 3.1% in 1 month and then rose to 9.1% in 7 more months. But hey, it was nothing to worry about. It was transitory. Think about that just for 1 minute, and think about how they handled this just for 1 minute. And think about how we've talked about we're all in uncharted territory, so how is this going to work out? So now we are where we are, and the markets are doing the hard work of pricing in all the risk that the Fed created, as well as all the spending that the Biden shoved down our throats. So strap in, expect more to the downside. And ultimately, there has to be a day of capitulation. But when? Today? Not likely. But it could be during the third quarter earnings season, which is also in the middle of the month of October, which itself has a history of market instability. but let's just not go there yet. Although I think it's very much a possibility. I've been saying it for a while that the September-October timeframe is a very volatile time for markets. The VIX, which is the fear index, up again this morning. It's now approaching the danger zone of plus 35. It's currently trading at 33.64 after trading as high as 34.88 overnight. As the angst builds, the VIX will rise, and the more it rises, the more angst there is, and the more angst there is, the more stocks will suffer, right? And another big headline this morning is all about Apple, which is down 3.5% in early trading. Why? Because they are ditching the iPhone 14 production schedule. Why? Because apparently there isn't enough demand. The consumer slowdown is real. Expect the tech sector to get hammered on the back of this news that will now take Apple down 22% year to date, setting it up for a move lower that could see it trade back to the June lows of $130 a share, right? It could as we get into earnings season and the markets come under some more turmoil. Companies that know that current earnings estimates are too damn high need to get out in front of them and adjust them before. They need to pre-announce. Otherwise, yes, they're going to take a hit, but not as big of a hit as if they wait and choose to make those announcements on the day that they report. Because if they do that, then investors are going to know why they waited. What were they doing? Were they asleep at a wheel? Did they not recognize that their estimates were way too high and the strength of the dollar? Right? Investors will not be happy, and that will be reflected then in the broader markets as well. Economic data due out today. Mortgage apps, like I said, they came in at down 3.8% and are now at a 22-year low as surging mortgage rates takes its toll. Retail inventories due out at 8:30 and pending home sales due out at 10. Gold trading at $16.38 an ounce, so that's also trying to find some stability right in here in the low 1600s. The S&P closed at 36.47 last night, down 7 points. It did make a new 2022 low yesterday and likely will make a new 2022 low again today. Although U.S. futures have rallied back from when I started writing the note, Dow futures now were only down 80, S&Ps were down 10, Nasdaq down 80, and the Russell was off 1. Jonathan Ferro on Bloomberg TV said it perfectly this morning. We are now in what we're going to call QC, which is quantitative confusion, and will remain so for the foreseeable future because we are in uncharted territory. Look, you know me, I remain cautious about the coming earnings season and the month of October in general. I would just say if you're going to put money to work, and you should, at least put it to work and leave it in your cash account in your long-term investment account. Doesn't have to be invested at the moment if you don't want to, but put it aside so it's there when you need it. Okay, so now what do we have for dinner tonight? Well, we need something really comfortable. So it's a time-honored favorite, and it's real comfort food, right? You can never go wrong with potatoes and eggs. This is one of those basic yet classic dishes that never goes out of style. You can eat it for breakfast, lunch, and dinner, right? So you can enjoy it 3 times during the day, and it's not gonna cost you an arm and a leg. It'll cost you a little bit more than it did last year, but it's not going to cost you an arm and a leg. So for this, you need eggs, potatoes, garlic, onions, salt and pepper, butter, olive oil, fresh grated Parmigiano cheese, and if you prefer, a pinch of Italian seasoning, right? You want to preheat the broiler too high. Now, you're going to peel a couple of russet potatoes and you're going to slice them right thin. You're going to toss them in a pot of boiling water, bring the pot to a boil, blanch them for 3 to 5 minutes, remove and strain them, and then just set them aside. Now, in a large bowl, you want to crack 6 to 8 eggs. You want to beat them really well. Add a splash of whole milk or half and half if that's what you have. Season it with salt and pepper, and if you like a pinch of the Italian season, now's the time to do it. Add in a handful of grated Parmigiano cheese, mix it well, now set it aside. In a large frying pan, melt a dab of butter and a squirt of olive oil and heat it up. Now add in the chopped garlic and saute. Next add in some sliced onions and saute it until they're soft and golden, right now you're going to add back those blanched potatoes. You're going to brown them in the onions and the garlic and the butter and the olive oil on both sides, right? That'll take another, 4 or 5 minutes. You want to get them a little bit of a color. Now, when that's done, spread them all out flat in the pan and now pour the egg mixture into the pan and allow it to set. Turn the heat down to medium, twirl the pan and allow the eggs to spread and cook, right? Once the edges begin to pull away, place the pan in the oven under the broiler, not way up, leave a little bit of room. Watch it as it cooks the top, right? It becomes a frittata. Remove and slide it onto a large serving platter, almost like you would a pizza. right? Have toasted slices of Italian bread on the table for the guests to eat with this. You can even make a sandwich. It is really delicious. And serve this with nothing more than ice cold milk. Whole milk, 2% milk, 1% milk. Don't serve it with fat-free milk because it tastes like water. Don't do that. You need to have some milk, and actually whole milk is the best. In any event, the markets are now open, right? U.S. markets are trying to find some stability. Let's see what happens. There'll be no note tomorrow because I'll be traveling, so I'll see you on Thursday. I'll see you on Friday. Until then, take good care.